Hey, welcome back to Midas Letter Live. Joining me this segment again is Mark Lustig, CEO of Origin House, formerly Canada Royalty Corp, now trading on the CSE under the symbol OH. Mark, welcome back.
Thanks for having me, James.
Mark, let's start off with a question about what caused you to change the name from Canada Royalty to Origin House?
Well, it was really just the evolution of the business. We had started Canada Royalty as an investment platform, largely into the U.S., acquiring assets in all sorts of different states, mostly around branded products, manufacturing, distribution. As we started to do that and started to see opportunities in California to actually acquire businesses and be an operator, and now we're the largest operator in the state of California, the name Canada Royalty really didn't make sense anymore. We weren't a royalty company and we weren't a passive investor via debt or equity. We were an operator. And so we went through a very significant process of figuring out what the brand should be. And Origin House for us represents a number of the cornerstones of what we're doing, like manufacturing, distribution, branded products, IP. So those are sort of our blocks that build that house.
Mm-hmm.
And clearly, as we continue to acquire more branded products, those are the members of our family that live in that house. And so that's sort of part of the rationale.
Sure. So you've got financial statements, third quarter coming out November 28th. How are those looking?
I think people will be pleased.
Okay. Understatement. It's understated as usual. Now, California is very quickly emerging as the leadership state in the whole cannabis complex in the U.S. And I'm looking at the depth and reach that Origin House has in the state of California. What is the competitive landscape for you like there? I mean, how do you differentiate yourself from the thousands of LPs and dispensaries and brands? I mean, what is it that is driving your success there?
Well, early on, we identified distribution and branded products as, let's call that the midstream. So there are cultivators here and there are retailers here, but someone's got to be the gatekeeper of making sure that those products get manufactured properly and they ultimately reach the shelves for consumers to buy. And that leaves the chunkiest part of the margin chain, but it's also the best way to view which branded products are going to be the winners. And so our strategy is that we built the distribution. We're the largest distribution company in the state. We now cover more than 75% of all dispensaries in the state of California, which no one else can say. And really, the second leg of that strategy is to pinpoint, because we're watching in real time which branded products are doing what, pinpoint those products as potential acquisition targets or certainly brand partners that can leverage off of the Origin House platform.
I see. So the strategy at this point has become to focus on California-only brands, logistics, sales locations.
I'm glad you brought that up because a lot of your viewers would be hearing a lot about now U.S. cannabis companies that are so-called multi-state operators. These are companies that have licenses in a variety of different states. Our approach has been sort of the opposite, which is we focused on California. We knew that this is the biggest market. It's the most competitive. We also think it's where branded products really need to be originated from, just from a pop culture and sophistication of that market.
Sure.
And so it was our bet that if we dominated in California, then and only then would we have the wherewithal and discipline to drag that out and go into other places, not 15 states and then try and be good at all of those, which is, I can tell you, going to be difficult. Even when I started Canada Royalty and we had multiple just passive investments in different places, it was difficult, never mind just managing vertically integrated operations. So our approach was dominate California, then start expanding into other places. And so our acquisition of 180 Smoke in Canada was actually sort of going the other way to what everybody else has done, where we felt like we had reached a place of understanding in California that we could really leverage the 180 acquisition for the Canadian market.
Wow. Okay, so looking at the way that the U.S. market is maturing now, the forced resignation of Jeff Sessions and the sort of incremental spreading of medical marijuana legislation in additional 2 or 3 states, is that going to catalyze a sort of M&A environment in the United States where the larger, recently structured companies are going to look to sort of accelerate their progress in the industry through acquisition of companies that might be targets?
Absolutely. I mean, there are two comments that I would make. One is, I've been saying since being on with you over the last couple of years that I thought that there would be continual progress in the U.S. as it relates to more states having some form of legalization. There's currently two acts in Congress right now that are gaining momentum. One's called the Farm Act and one's called the State Act, both of which would be hugely positive for the legislative environment. But the two comments are, first, every day we at Origin House see new players from other industries, whether they're tobacco or beverages, which has been very well covered, but nutraceuticals, even on the edges, some pharmaceutical companies taking a look, and that's just going to continue. The fact that Michigan is now a rec market as of 2 days ago is just more fuel on that fire. So that, one part of it is other industries starting to look at acquisitions, but to your point, the M&A environment is very active right now. You saw a company called PharmaCann be acquired by MedMen several weeks back. You saw Ianthus acquire MPX, which happens to be a California platform. And, to your point, I think some of these operators who have very large capitalizations are looking at how they can expand into some key states by making some strategic acquisitions.
Mm-hmm. I'm wondering, will federal de-prohibition of cannabis in the United States mean that all of the state operators are no longer constrained by state borders?
Yes, it would. I mean, it would instantly, depending on what the legislation looks like, it would instantly resolve the banking issue. Mm-hmm. And it would also resolve the logistics issue, let's call it, of not being able to manufacture and move product from state to state, which really changes everything. I mean, the way that we've approached our business at Origin House is the acquisitions that we've made and the platform that we've built, we see as a post-prohibition, deschedulized market where we're manufacturing products in California that are going to the entire southwest of the United States. So we're thinking sort of ahead, just like a large multinational company in tobacco would think this is how they run their business. They have hubs, and so we do anticipate those walls, if you will, coming down, and we've planned accordingly.
So how will the state differentiated licensing rules affect the cross-border trade among states after de-prohibition? For example, in some states, one operator can be all things extractor, grower, product manufacturer. In other states, you're only allowed a combination of things. How is that going to play out in that environment?
Well, I think that it's probably a bit premature to be talking about full-blown descheduling or de-prohibition. The State Act that I referred to earlier is my, and I think our advisor's best guess of what will happen next, which is that the State Act really just gives the states the prerogative to run the program however they want, which would still, lead to progress on the banking side and some of the logistics side, but it also probably helps the brain damage that would be created by trying to unify 50 different states that have all been in some different type of form.
Sure. So you don't think the risk is very great that Donald Trump might recognize the opportunity inherent in declaring by executive order the de-prohibition of marijuana federally?
I think he actually gets it, and I'm sure he has a bunch of smart people who have done the math on votes and what the population says about their support for this, but I just think it's very complicated to bring something to deschedulizing it that quickly. And frankly, from the counter royalty perspective, I've said this often, the best case scenario for us is status quo.
Right.
Because we're building a platform that would be confused or we'd start to see competition like we've never seen before. If this descheduled tomorrow out of some act of surprise, then all of a sudden things would be highly competitive for things that we're looking to acquire, and we want a little bit more time just to keep building our value. So.
Okay, so there's no denying, and I'm not asking you this because I just look at your financials and I can see that you are an acquisition target for a large U.S. national cannabis company that will come out of the woodwork upon de-prohibition and perhaps sooner. If that was to occur, what would you do next?
I'm not sure. I'd probably rest a little bit. But I mean, the beauty of what we've built at Origin House has been how many different other companies and other types of relationships we've built. And I mean, it would depend on when and how that happened, but there's no shortage of opportunities for.
Can you talk about any of them by way of example?
Probably not.
Oh, okay. Darn, I tried. Okay, so then the evolution of the legalization in the United States to us in Canada appears, you know, like it's 2013 in the U.S. and they're just getting their heads straight. So does that mean, I mean, we're looking at the companies that are operating in the U.S. listed in Canada, as well as the one or two companies that are listed exclusively in the U.S. and operating in the U.S., we're seeing the volumes of those stocks really start to far outweigh the volumes in the Canadian market issuers. So is it safe to say that the U.S. investor is all in on the market already, or is this just a taste of what's to come?
You know, I think this is probably the most important trend that's starting to take shape for the investment side of the cannabis sector, which is that, you know, the U.S. market is 20 times bigger than the Canadian market, and there are 1/20th the number of companies to invest in. And so that should put in perspective where the money is flowing or should be flowing. And the reality is that the U.S. investor, aside from some very forward-thinking people who got their heads around this to come and invest into Canopy or Free or Aurora over the last couple of years, has been nowhere. And so I would say that if you want to use the baseball analogy, we're not even in the first inning yet of what the investor in the U.S. has exposure to right now. And then on top of that, those people are going to be looking to buy U.S. asset-based companies. And so when you start looking at how many of those there are, it's really less than 10 that are investable. And your point about volumes, I mean, that's starting to play out before. I mean, I think Canada Royalty and now Origin House was one of the first companies investing in the U.S. We started on the CSE. Our volume may have been 100, 200,000 shares a day. Now it's 2 million shares a day between both our U.S. listing and our Canadian listing. And there are, I think, 4 or 5 deals that are coming to the market in the next couple of weeks that are all U.S.-based companies that really the U.S. investor is starting to look at this sector, but they've been nowhere.
Right.
And Tilray would be a good example. I mean, you get a listing that U.S. investors can actually feel confident in buying, i.e. on the NASDAQ, and the thing goes from, you know, whatever, 10 to 300 or something. Right. I mean, that should be a sign. I don't have an opinion on Tilray, but I'm just saying that should be a sign of how much pent-up investment appetite there is for a cannabis stock that gives someone U.S. exposure like our company.
All right, Mark. Well, as ever, very enlightening. We're going to leave it there for now and come back to you in due course. Thanks very much for joining me today.
Thanks for having me.